Hey everyone, there's been a lot of news lately for Tesla stock investors and Rivian stock investors. Tesla with the positive quarterly delivery numbers that have sent the stock price higher by double digits, and Rivian with the investment from VW that sent its stock price soaring. So I thought it'd be a good time to do this comparison video answering which one I think is a better stock to buy, Rivian versus Tesla. So let's get into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So I'm going to compare these two EV companies on several critical financial metrics, including revenue, profitability, and valuation. And I'm going to start with the revenue, and I'm going to highlight the big difference between Tesla and Rivian. Tesla, you'll notice, with $94.75 billion in trailing 12-month revenue, is roughly 20 times the size of Rivian with $4.977 billion in trailing 12-month revenue. Tesla, a more international business, a more mature business, has scaled up manufacturing and marketing and consumer brand loyalty to jump up the ladder in sales. Rivian, a newer brand, just now ramping up production and marketing, and in its trailing 12-month period, revenue did increase. However, in their year 2024, there isn't expected to be very much revenue growth for Rivian. The company said it's going to produce the same amount of vehicles this year as it did last year. And since it has cut prices on some of its models, revenue is likely to be lower this year than last year because of lower average selling prices. Longer term, Rivian has better growth prospects compared to Tesla in specifically electric vehicles. Now, you could argue Tesla's revenue prospects are much larger because of driverless car technology, which could ramp up other sales for Tesla, its energy business, robotics, etc. However, just comparing these two on the EV segment, given Rivian's smaller size, given its opportunities still available that it has yet to capitalize on, such as lower priced models coming out likely in 2026, and international expansion and the manufacturing expansion at the Georgia facility, coupled with the strategic partnership with VW, the near-term growth prospects look more promising for Rivian than Tesla. However, longer term, I acknowledge Tesla has a probability, a chance that it can develop driverless car technology, which will boost the company's overall revenue and expand its market opportunity significantly. Comparing these two on profitability, you'll notice another big differentiator here. Tesla's operating income of $7.4 billion is much better than Rivian, which is generating significant losses, negative $5.8 billion in the most recent trailing 12-month period. However, Tesla's profit has been coming down meaningfully, as you'll notice here. Its operating income was approaching $15 billion, and it's now down to $7.39 billion. Why are Tesla's profits down? Well, notably, the company has slashed prices, offering several rounds of price cuts. Additionally, it's been offering other promotions, such as financing options, financing deals, and then it invested aggressively buying and investing in research and development to develop its driverless car technology, and so profits have come down meaningfully, and they're likely to continue to come down for the rest of this year, as the first two quarters of 2024, the company's delivery numbers have decreased year over year, and they're likely to continue decreasing year over year for at least another 1 or 2 quarters. Meanwhile, Rivian is making progress on profitability. Management said that by the fourth quarter of this year, they will be gross profit margin positive, and the strategic partnership with VW will help the company's profitability, as they will be able to share some of the software investment with VW and spread out those costs across a greater number of units, thereby decreasing the cost per unit on software spending. So Rivian has already made progress here from a loss of $8 billion to a loss of 5.8 billion. Now, these losses are still dangerous, and the cash injection from the VW deal will help Rivian on its runway to hopefully reach profitability over the next few years. The first milestone will be gross profit margin, hopefully by the end of this year. The company still has to prove and demonstrate progress towards profitability, something Tesla has already demonstrated for several years now. Cash flow from operations is a similar story, with Tesla having a big advantage, but the trends working in Rivian's favor. Cash flow from operations of 10.98 or roughly 11 billion for Tesla is down from around 15 billion, but still significantly better than the negative 4.6 billion from Rivian. But you'll notice Rivian's trend is improving from negative 6 billion to negative 4.6 billion, while Tesla's trend is worsening from roughly 15 billion down to 11 billion. And similar to the reasons for operating income, Rivian's cash flow from operations likely to continue improving, and Tesla's cash flow from operations likely to continue worsening as the company's sales year over year decline, as it continues investing in the development of driverless car technology. The company's cash flow from operations likely to continue moving lower. Rivian, meanwhile, as it approaches gross profit margin positive, that will help improve cash flow from operations. And finally, when the company launches its lower priced SUV at the 45,000 price point, that will facilitate the next leg of growth for Rivian, which will spread out its fixed expense and help the company deliver better cash flow, better profitability for the business overall. Finally, I wanted to compare these two on valuation, and when measuring by the forward price to sales ratio, Tesla is more than 3 times as expensive as Rivian, trading at a forward price to sales of 6.7, compared to Rivian, which is trading at a forward price to sales of 2.183. Now, when measuring by enterprise value, Tesla is roughly 76 times more expensive than Rivian, trading at an enterprise value of 764 billion compared to just 11 billion for Rivian. Now, these two companies have excellent growth prospects for the next 5, 10, 20 years, as governments worldwide are encouraging the enhancement and purchases of electric vehicles. However, consumers are not on board fully. More than 9 out of 10 consumers are choosing internal combustion engine vehicles. So governments are trying to push this on customers. Customers are resisting for the most part. However, if governments keep pushing, then it's inevitable that these two companies will continue growing. It's a matter of government policy for the most part to determine whether or not these companies continue growing over the next 5, 10, 20 years. If I had to pick between these two EV stocks, I would pick Tesla. I think the company has earned this premium valuation over Rivian. Being in a business with so many companies that are losing money on the bottom line, burning through billions of dollars of cash flow, I think it's more vital to be in a position where you're generating billions of dollars in profitability. It gives you a competitive advantage. It allows you to cut costs, cut prices, selling prices, so to gain market share, and you can sustain those price cuts because you're still generating positive cash flow. And so for those reasons, I like Tesla better, even though I acknowledge Rivian's growth prospects are better in the near term. I would still pick Tesla right now between these two companies. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.